Hi, everyone. Welcome to Payments. My name is John Gaffney. I'm Chief Content Officer here. And today, our episode will be dedicated to the What's Next in Payments series. This month, we're calling it the Halftime Report, which takes a look back at the significant developments in the first half of the year and takes a look out at what to expect in the second half of the year. And my guest today to discuss some of these developments is Ram Sundaram. He is the co-founder and Chief Operating Officer of TerraPay. If you haven't heard of TerraPay, you certainly will soon. Its mission is to connect borderless financial world and simplify the movement of money everywhere. So, Ram, welcome.
Thank you. Glad to be here.
And I was going around your website, getting ready for the interview, and I noticed you're referred to as the architect, and I thought that was very interesting. So, tell us about that a little bit, and also tell us, what did you see in the first half of the year? I know you had a big announcement with Thread, but had the first half of the year net out for TerraPay?
It's been a very exciting first half of the year. It's been action-packed. We've been, it's not just Thread. We made quite a few announcements. We have more coming up as well. So yeah, it has been action-packed, and we are looking forward to really scaling up global interoperability between wallets, bank accounts, cards, all financial instruments.
Okay, interesting. And one of the things you do is integrate lending services into products. And my first question for you is, how is the integration of lending services into non-financial platforms changing the landscape of consumer as well as business credit accessibility?
So one of the core demographics that we serve is the financially underserved population in emerging markets, right? And for them, access to credit is fraught. They don't have access to the traditional lending institutions. They work with mobile wallet operators who nowadays have started offering credit. But for them, there is a large prevalence of predatory lending apps in emerging markets. I don't know if you've come across this. It's made the news in India. It's made the news in other markets as well. These are fly-by-night operators who launch an app for lending, and desperate people use them. And then they get into trouble because, of course, the interest rates are high, and then the recovery tactics that they use are cause a lot of social damage to the creditors. So embedding lending into services that our customers use, the people actually use, the e-commerce or the retail or ride sharing, things like that, non-financial services which customers use, makes credit more accessible. It makes that credit more secure and trustworthy and more likely to come from a regulated source than something that is dangerous.
So let's talk about the user experience with embedded payments. So in what ways are embedded payments enhancing user experiences and reducing friction both in retail and B2B transactions, Ram?
So if you look at lending itself as an embedded service, it is what we call BNPL today is an embedded lending service, right? It is at the point of sale. It is where it is needed. It is in furtherance of an activity for which that money is required, right? And if you can do that while credit rating the customer in real time, because you have a background of transactions of the customer, you have a sense of financial history of the customer, you know their repayment capabilities, you are essentially tying this into their financial lifestyle. That obviously is the way to make lending accessible. Any embedded financial service there are very few financial services that we consume standalone, right? They are in furtherance of other activities, our day-to-day activities, and obviously embedding them is a better user experience in terms of using these services.
Interesting. So the technology backbone of everything we're talking about here is the API. They play a critical role in integrating financial services into various platforms. Can you discuss some of the challenges and innovations in API development that are driving what TerraPay does?
Yes, of course. The significant challenge in API services being rolled out is standardization of data. Is for us the another significant challenge is harmonization of data and financial regulations across countries, because we operate in the cross-border space. So there is often conflicting regulation about data sharing, data hosting, and so on. And in where you are in the situation where you cannot provide those services without sharing that a certain set of data. But the more data you share, the more secure the services, the more compliant the services. But then you run into conflict with things like data privacy laws and so on. So balancing all of that is a significant challenge, and it needs to be done at the platform level. We work a lot on standardization with our partners cross-border, applying the principles of ISO 20022, if not necessarily using ISO 20022, makes that kind of makes sense to in a lot of these situations. That's really it, really, and it's about scaling as well. When we reach TerraPay's core is low value but high volume payments, right? And that means that you need to really scale to scale to levels that are common in the telecom industry, but not necessarily in the financial services industry. The founders of TerraPay come from a telecom background, so we understand this well, right? The marginal cost of serving another customer should be as close to zero as possible, that if you build your infrastructure properly. And that's what we have built out.
So you mentioned ISO 2022 messaging, and I know that's very important in the cross-border world, which you guys play in. Have you seen a better uptake, a better adoption of ISO messaging, and how important is that going forward?
It is extremely important going forward, and yes, there's been a significant uptake, mostly because of regulatory mandates coming in. SWIFT is moving to ISO 20022 this year, and that forces a lot of institutions to migrate there. New national payments or faster payments rails that are coming up are on ISO 20022, so that again is assisting in the shift. Obviously, there's a lot of work to be done on traditional financial institutions' backends. Their systems need to be upgraded. They need to build these capabilities in, and that's cost as well. So there are those challenges, but yes, uptake is increasing exponentially.
Okay, great. So one of the things, hopefully, that is updating and getting better is compliance and risk management. With an ecosystem where financial services are ubiquitously embedded, what strategies and technologies are employed at TerraPay to make sure the compliance and risk management are being addressed?
Like I said earlier, compliance and risk management are about data. The more and better data that you have, the more seamless your compliance and risk management can be. And we work with our partners, so we reduce the number of aggregators that we go through, or data intermediaries that we go to. We connect directly to financial institutions ourselves, so that we have access to that data from their platforms and so on. We've ensure that we are certified with the different certifications that you need in order to give our financial institution partners, the comfort they need to be able to share their data with us. And we work closely with regulators to also encourage this kind of data sharing. Like I said earlier, there are conflicting positions between data privacy and financial transparency. Especially in the cross-border space, there is a mandate to carry as much data as you can possibly provide right to the last financial institution in the chain. But very often compliance officers interpret it very conservatively and try to restrict the amount of data they share. And we have to work with both sides of every transaction to make sure that there is an understanding on what is the optimal amount of data that you need to send. Obviously, you don't want to send more data than is required, because then that increases your threat exposure.
Okay, great. So I'm going to ask a two-part question here about future technology, one about blockchain, one about AI. So I read a lot about the ability of blockchain to be a harmonizer or a friction remover in cross-border payments. Is it something that TerraPay is actively looking at?
No, we have been looking at blockchain ever since it started, the technology became available. We haven't found a use case for it yet. If you look at the business we are in of payments, of transactions, blockchain is a way of carrying out a transaction without having a trust relationship. But the financial world that we are in, where we are intermediaries between licensed financial institutions, that trust is already established contractually. Right? The whole financial infrastructure that we have today is about that kind of contractual trust and reliance on other financial institutions for compliance and risk management and so on. Blockchain doesn't fit in that scenario. It's if you look at crypto as an application of blockchain, it's good for untrusted counterparties, right? Anonymous transactions, but you can't have anything anonymous in cross-border transactions.
Let's talk about creating new revenue streams, because I think what is probably underrated or is not talked about enough is that cross-border payments and financial inclusion, these increase the revenue opportunities for banks as well as other companies. Could you talk about that a little bit?
The revenue, essentially, you can increase revenue by either charging a customer more, or you can reduce your costs, right? And the use of technology in reducing costs is something that is easier to do than trying to charge the customer more, obviously. World Bank guidelines or rather the SDGs for mandate that we reduce the cost of cross-border remittances. It's currently around 8%. When we started TerraPay, it used to be around 15%. So it's a significant change in 10 years, and we should really reduce this as far as we can. Personally, I'd be extremely fulfilled if we could enable a world where you can do a $10 transaction without thinking about the cost. And today, that's not something that's really possible. If you do a $10 transaction today, you'll probably spend a very significant part of that $10 as fees, right? And we need to get to a point where that base fee is something that you don't have to think about, so that you can do really low value transactions. And that can change the landscape of cross-border payments and remittances. And that obviously will also help in increasing revenues. But apart from that, the way that you generate more revenues is that you create new use cases. Now, again, the cost of remittance, the cost of cross-border payments determines what services you are able to offer cross-border. If we reduce that, obviously there are more use cases that open up for cross-border services and revenue streams.
Okay, well said. So last question, Ram, what are you excited about for the balance of the year?
Oh, we have some significant announcements coming up. We have we are opening up large markets for cross-border low-value payments. Wallets, as you know, are our key focus, especially in emerging markets, and we are opening up access to banks worldwide, customers of banks worldwide, to be able to send transactions to wallets. And this is something that we really look forward to having.
All right, great. Hey, that's a wrap for this episode of Payments TV. My name is John Gaffney. My guest today has been Ram Sundaram, who is the Chief Operating Officer at TerraPay. Ram, thanks for joining us.
Thanks, John.